Boom. We are alive, ladies and gentlemen. Look, okay, so the light behind me is yellow right now. And it's for a good reason, I think. I think it's a two-part story. Generally, stories not just one chapter. There are usually multiple chapters. And for those of you that have been joining us since about March, you'll know we are studying mostly Wyckoff ranges and sentiment analysis, and generally for longer macro perspectives due to our love of randomness and asymmetry. Now, I know that probably just sounds like a bunch of words, but I swear it's important in this long-term thesis. So let's gonna go right to Bitcoin on the 4-hour and talk about reaccumulation and the potentials of distribution. So it took us a while to get here, and that's an important part to remember. Let's turn some of this color off here. Let's go back in time and rewind. And remember that to get this high in Bitcoin, we had to go through this really long story of accumulation. My chart is not not apparently loading all that well today. Things are, let's see here. Let's try and reload this again. Jungle internet, ladies and gentlemen. Now it's not going to load at all. No. Okay, well, let's use Ethereum. Okay, well, we'll use Ethereum to start off with here. Okay, so even back to March, at the very least, we can get our story all the way back to March. And this is what our spring was. This is the psychological moment in time where the prices of any given asset were irrationally priced to the downside. This is a hyper important moment in time to remember because it marks the alpha and the omega of the investment thesis that I now operate by. Now, this was a very big learning lesson for me, and the extension of that learning lesson has been every step into this bull market that we have gone since that rather visceral moment in time. It's usually emphasized by the saying, buy when there's blood in the streets. And often these things get conflated. For instance, oh, buy when there's blood in the streets. I even used that as a title yesterday for yesterday's thumbnail. And again, the interesting part here is that we want to base our understanding off this larger macro thesis, because as we start to look at this 4-hour time frame, it becomes very elusive to where we're going. Okay, so remember, this starts with the light is yellow. It's not red, it's not green. And I want to go over why it's neither of those right now, because we are right in the center of this bull market, basically. And that could mean one of two things. Number one, it means I wish my internet was faster out here sometimes. I was trying to get the full day story that we had for Bitcoin drawn up. We haven't touched it since. It's performed beautifully, but it just does not want to load, so it's not very helpful at this moment. Oh well, nothing I can do. I guess everybody wants to look at TradingView right now. It's probably what it is. So we're going to use Ethereum here then for this example as well, because the question right now is, are we witnessing distribution or reaccumulation, right? And these upthrust after and distributions into the middle of the range are usually noted by an increase in supply. Now, I would usually like to see it as high as this shakeout here with increased volatility. And we didn't see that. We are seeing an increase in volatility for Ethereum above the box here. So Ethereum actually looks strong at the moment, and the supply doesn't indicate something that should be too worrying. Now, if it was as equally as high as the primary shakeouts, I would be a little concerned, but it's not anywhere near that. Now, the downside again here is that does also mean that we are seeing an increased price spread for the amount of supply coming onto the open market. And we've noted why this happens before in other videos when we talk about the liquid supply chain, usually for Bitcoin, but again, Bitcoin's just, there we go. Here's the, open supply and Bitcoin. So generally, let's say I have 100 of something, right? Just a nice, easy round number. And if I want to sell you one or two of those things, the volatility of the sale price of each of these will vary depending on how badly each person wants that one of those 100 things, right? It could be a collector's item, it could be a Bitcoin, it could be any number of things, but really it's the idea of scarcity and the mental idea of demand and that limited supply that is available. So Bitcoin fits that bill, so does Ethereum. And we're looking for these kind of idealized market structures, right? So we've gone over the idea that primarily we start off in a long-term reaccumulation. And this is kind of the part we want to focus on, is that here we have 2014 through 2017. And this was a very long period of time where we sat in a very long area of accumulation. And this was basically all value zone. And the funny part is if you had bought at the very top like a retail investor, and you bought at $1,100 and you carried all the way through the bottom, you would have probably thought you had lost out when you should have just been buying the entire time effectively. And that's a good, let's remember that, because it's important to remember that in 2013 for Bitcoin, had you bought at the exact all-time high and did nothing but buy afterwards all the way until it went down to its new low, you would have done fantastically well throughout a period of, let's see, how long did that take? Come on, 1,300 days, guys. Like, this is not a super long period of time. So the accumulation range is hyper important. And we just went through another really long accumulation range. And after we broke out of that range, we did a very nice, clear 1,800% from the top of the box. In the middle, it was a little bit further than that. And when we see these really long accumulation ranges, it generally leads into the same ideology that markup cycle is going to be equally as long. Now, you can view these in the P&F charts, and I'm not equally as good at doing that as I am just at feeling time for whatever reason. And we're not through this bull market yet, and there's two main indicators for that. Now, could we see let's say a larger distributional wave pattern? Absolutely. We could definitely see something like this. Boom, boom, and continue higher. Nothing to say that's not possible. Although I'm not leaning on that, because again, I want to keep focused on the individual patterns. Now, actually, Bitcoin does not look as strong as Ethereum right now, which is kind of funny, because on the private shakeout last time, it was Bitcoin that looked strong and Ethereum that looked weak on this shakeout. Here we see strength in Ethereum. It's like, Jesus. And that's a good thing. I actually think that this market dynamic is really important, because I believe that the market is maturing in a lot of senses. Now, on the ridiculous point here, Dogecoin blew up. So this is a worrying indicator, because it definitely means we're in like the madness, right? And I'm a big fan of Dogecoin. Don't get me wrong. I have long said, and well, what is this, approximately like 3.5, 4 months until I've like really kind of honed in on my thesis here in January. But this idea of accounting for randomness and asymmetry, shout out to the Bosnian Dragon, who shared this example where he's like, look, I put $500 into SafeMoon and now it's worth like $20,000 or something. This is playing with asymmetry. And this is exactly the point that I like to focus on, is that randomness can play in your favor if you're willing to go out and participate and learn. And ultimately, ideally, Doge is an example of that randomness, but also an important example that we are like well into our way of the kind of the hype and the mania. It's like the Doge cycle indicator. I think Doge should stick around. I'm a big fan of the meme, but I think it's a cycle indicator for the level of retail and just people buying whatever they can get their hands on because of this asymmetry in an illiquid product, in an exploding marketplace where money's just kind of sloshing all around. You have billions of dollars in liquidations. So back to where we are in Bitcoin. Now, we are seeing a decrease in supply, and the downside here, and again, this is kind of the worrying temporal indicator, and this is the idea for the temperate, right? We've seen it before where the middle or the top of the bottom training range gets tested again. Now, this upthrust here, it's not showing the supply indication to me that this is a market finality, that this is over. Generally, it's when we see the supply of the upthrust and the amount of supply come into the market equal that of the primary shakeout, which is like up here, right? And we see that in this primary shakeout area as well, up here, and even higher in this previous one. So again, one of the reasons why we could be seeing an increase in volatility is just the lack of supply on the open market, right? So one big seller can do this quite easily to the open market just because there's hardly any supply out there. And we've seen this before on very specific individual exchanges. So with these horizontal trading ranges, really what we're trying to do is assess two things, right? In the idealized market cycle we have drawn over here, It's just a simple accumulation and then distribution, just an up and a down. Seems super simple, right? And here we're about halfway through that. And generally, and I only say this through retrospective study, you'll see an accumulation area. And remember how this is like a few hundred days, guys. This is a powerful indicator that it's going to continue longer. It goes up, and it does a reaccumulation somewhere here. And then it goes for its kind of final markup. And then because of the, I'm sorry, my mouse keeps hitting my, hitting the stupid USB dongle on this Mac. Okay, so let's try this again. So an idealized market cycle often looks like this cup and ladle type idea. And then you have a reaccumulation range right in the middle, and then it'll shoot up and then come down and then go into a distribution pattern. And, you know, I'd speculated that because Bitcoin is so volatile, we could see some astronomically high price, but I'm still sitting somewhere between 120 to 200,000 for like a nice top or something. So a temporary like middle range distribution here is not out of the picture, and it's not showing the eerily damaging signs of this massive level of supply coming into the market to really signal, hey, this is over. We are seeing a chunk of supply, yes, and we are seeing increased price spread, yes, which we kind of would expect. And more importantly, I think again, what we could witness is just kind of a return to the mean, something like this. And again, it could just be a rising gradient bottom the whole way through here. We've seen that a few times before. So it's not a bad indicator for Bitcoin. I haven't seen, it's the supply that makes me feel better. Again, if we saw a massive amount of supply come into the market right now, I'd be a little bit more worried. Like if it was a big chunk here, but it's not. It's still below these primary shakeout by a significant amount. And I think that's important. If it was an increasing supply signature and increasing volatility, so I would be more worried. Now, again, if we get into the minutia, we could start talking shop, I guess, about the range itself, because the range itself doesn't look as good as the supply characteristics. So just for fun, let's bat the string around the room for a minute. If my internet would load this here, I might have to give it a second. Should have pre-loaded both Bitcoin charts. Yeah, okay, here we go. Okay, so for those of you that don't know, we like to go over, oh, you're live, good, that's good, that's a good sign. Wyckoff accumulation and distribution ranges. Now here we're looking at a nice horizontal trading range. Primarily, it looked like a nice breakout range. And then yesterday, approximately had a close, big down. And again, what kind of keeps me feeling a little bit sane about this is the fact that the supply markers are not as big as the primary shakeouts here. Then I would be worried, but we could see that still. So right now, what doesn't look good is that we could not get back above 59,000, our major area of resistance on the trading range, and above 57,000, our point of control here. We came right up against into the point of control and then turned back around. So this is usually like a last point of support. Where you see stuff like this, and this is where it can go down quite quickly and then very, very dramatically. That's what a distributional trading range would look like, and this would be a UTAD test. This is possible. I'm not going to negate that this isn't a possibility, because remember, we've talked about the nature of fractal mathematics before and the fractal nature of market cycles. If we are to assume that we're going higher based off the length that it took to get here, based off our accumulation ranges, approximating well over the few hundred days, almost 800 days, I believe, we would see another trading range that goes up along here. And then this would become a reaccumulation after decline. So this is like a stepping stone process, right? But what I did do, just to make myself feel better and to answer a question that some of you had asked me. A lot of you have been asking, like, oh, when do I take profits? What's a strategy for trading? And I've always said I take out like 2 to 3 years of operating capital. Well, today, I just happened to actually make sure I have enough US dollar operating capital to make sure to last the next 2.5, 3 years. on my regular operating budgets. So I just thought it was fun. It looks like it could be a temporary moment of distribution. Even if it happens, let's say we swing down, we go May, June, July, August. By August, we're back on the up and up. So I'm not particularly concerned, but just for fun, I figured I would make point and do. Why not? We're up extraordinarily high from where we started this cycle. So who gives a shit? Started back here in March, April, May. These were like our first reaccumulations back here at around $9,000-$10,000. They were absolutely gorgeous. I love that moment in time. I'm forever indebted to the pandemic for teaching me so much about human psychology and the irrational pricing of any asset, really. Except for most people still don't seem to value water and air as much as we should, but that's okay. Make sure you're drinking more water. It's always a good sentiment. Okay, so in this particular 4-hour trading range, yeah, it doesn't look super strong. In the event of the whole story, when I zoom out and I go more macro, even if we do have a temporary down moment, which is a possibility, I'm not concerned about the more immediate future, like the next year or two. Generally, and I think a good investment thesis should be run in two directions. Number one, you understand the mathematical principles of fractals, asymmetry, and randomness. They're probably some of my three favorite topics. Even if you remove the markets, they're really fascinating things to think about, worth the extra time to meditate about mathematics, the monetary mathematics meditations. I don't know. It's probably more enjoyable than the money a lot of the times. I love these types of thought processes. It's highly rewarding to because I don't think there's never like an answer, but nonetheless, when we're witnessing these macro cycles move, we very often get caught up like in this time frame. And someone's like, "Oh, you said it was going up, and look, it dropped 20%." It's like, of course it did. That's what Bitcoin does. Bitcoin goes up and then it comes down. It goes up and then it comes down. It goes up and then it comes down. Ultimately, this idea of, well, how long do you want to be in the market for? If you just accumulate on the downside, you might not show back up to the markets. So most early investors and traders should just be flexing the muscle of accumulation. And I'm at a fairly advanced point where I'm trying to figure out like very, very specific market minutia for when the market cycle is over. I don't think it's over. Could this be a minor distributional event? Yes. This supply, it does not indicate to me that this is like the end of the bull market. If we saw that supply come in here that was equal to this, like if you had an equal supply line come in right now, you're like, oh God. Or if all of a sudden it does jump up here next, like, okay, maybe I was wrong. But for now, this just looks like a temporary moment in the bull market cycle. So I do not believe this is the Bitcoin top, not one bit, but it might be a temporary distribution moment. We're going to have to keep a close eye on it. And again, use it as a learning example. For me, I think one of the most important parts, again, is to remember that this story started at the beginning of the pandemic. And that's really when I learned like the spring. We study these ideas, the spring, especially in the reaccumulation range. It can be so easy to distort what the spring is, but the spring is really way back here. Like when you want to enter the market cycle is at a complete irrational evaluation of any asset. And that usually happens when people are irrationally fearful, from pandemics to wars to terrorisms to political strife, aliens, who knows, any number of things. That's the spring. That irrational evaluation of assets has been the spring for time immemorial. So we use it here, I think, in the middle of the reaccumulation ranges a little bit too loosely. The spring is a very visceral moment. This little 20% drop, doesn't bother me. I'm still thinking about, I'm thinking about going to Indonesia. This little drop has in no way affected my thought process around life. Whereas in March back here in 2020, I was not sure what I was going to be doing with life. I was thinking about buying a horse, maybe. I bought another fridge and I filled it with food. I'm thinking, yeah, that's right. Look at me. I'm happy Tio. I've got a fridge with extra food in it. Yay. But that was the true story. But because of that, maybe it took like 2 weeks to kind of snap out of and be like, oh yeah, this is that moment. And then we saw our first reaccumulation range, right? So here, these first movements after March are the areas you want to pay attention to. This is the most valuable point of entry. I took a few exits today just because look how high up we are. Well, okay, sure, there's a cool minor distribution. Just let's make sure I'm protected. I got the next 6 months, 9 months ahead of me here where we could see a cycle low, maybe 30,000, who knows? Just like, I'm not saying it's going to go, I'm not saying it's going to do that, but maybe for the next 3 to 4 months, it cycles down, trends down for a bit, and then it continues to go up. There's nothing wrong with that. It'd make me very happy because, again, remember, my thesis started here. I don't think it's over here. So even if we have a temporary down here, I'm still in the majority of my positions. Just again, the budget for the business is usually a pretty clear operating factor for myself. Just so that I can continue to, do what I love to do. Go to the beach, play music, hang out with the dogs, read. All the sweet things in life, and apparently go to Indonesia. Okay, hopefully you guys got some value out of that. I don't think we're in distribution. Not at like a peak level. It just doesn't have the key indicators for that for me. Could it be an intermediate distribution? Yeah, absolutely. And we're kind of seeing that here as a potential right now. Again, with this being with phase where and this is the kind of the tricky indicator with phase C, or basically what comes after phase B, is that it can very easily turn into a distribution moment. And because we're not closing above the point of control right now for this trading range that we have in view, it doesn't look great. This does not look great. We could see something like this, and then a quick back test to like 29,000. And again, you could see that it would just make potentially a bigger trading range here, and we have seen that in the past as well. So it's not out of the picture that we have this kind of bigger event to shake out new entries. But if we dive in a little bit and we go a little bit, use some things we haven't done in a while, there's two things to maybe to point out that might not be the case. So we'll switch this off. We'll go back to the area chart, and I think I have it on Ethereum too. Oh, they're just taking a while to load, I guess. Okay. So here, now we're running some Bollinger Bands and some slight color changes within our trading range just to get a little bit of a better view here. Now, okay, there's a few primary things I'm going to point out. Now, this chart looks kind of messy, and I should actually, if I change the color of my... doesn't want to change right now. That's fine. Okay, so what we're looking at right now is the same trading range, just with a bit of a different viewpoint right now. This is operating as a Bollinger Band. We'll go back to the 6 hour, and it's going to show us our support and our resistance measured out in two ways. Now, it's actually a green line, not too dissimilar to the one I had here, and the previous resistance line. Now, what's nice is we have this band here, which both has a resistance and a support at this area. Great. Now we have that actually just knowing because we've drawn those in ourselves with our two trading ranges, but nonetheless, that means there's a lot of resistance here at $48,000 before we would go lower. And we're actually getting a quick buy signal as we've exited the Bollinger Bands, which is quite nice too. Now here on the 6 hour, it does look a little more worrying on the supply signature, as the down spread here and the shakeout have now been are pretty much identical. So up close and personal in this trading range, it actually looks worse. Okay, yeah, so we'll keep that in mind. So I'm definitely leaning towards a distributional moment, that's for sure. How long it's going to last, I'm not sure. We're going to want to keep a close eye on it. And again, for me, I'm not trying to time the exact market high like get out here. I've shaved off some profits. I've taken my few years worth of budget, put it into the bank, and I feel good. So everything else I'm just going to let ride here, but this moment is the one we're watching here. Again, I do see a buy check, which is usually signaled by this kind of break below But we're going to want to keep a close eye because we could not get back above the point of control after we had that buy click. So that's not a great sign. And again, it might not completely destroy our sentiments. We may just only come down to 48,000. But usually once we're going down that low, if we do start to see this increase in supply signature again, which I guess now that we're up close, it does not look as good because it is equal to the shakeouts here. But we'll keep that in mind for later. We could be witnessing an intermediary distributional event, which I suspect would just become part of the bigger story on our way to six-figure Bitcoin. We'll just leave it at a six-figure Bitcoin right now. We'll worry about the exact top when we get there. For now, again, I do not believe that this is the top, although we definitely could see a check of maybe, who knows, even 36,000. I don't feel that's going to happen. Like I just don't feel that's the case. But either way, just out of a moment of sheer love for this spread here, I was like, cool, we're up. We've done great so far. This 20% spread was enough. I'll take it. We'll go from there. Anyways, we'll go to some questions and take a look at your guys' thoughts right now and see what's going on in the chat. Okay. Yeah, we're going to want to keep a really close eye on some of the data points here. Just because, again, now that I'm a little bit further away here on the 6 hour, the supply signatures do jet up extraordinarily high here on this current shakeout, which does seem more distributive to me. Okay, so let's see what you guys are saying over here. Hey man, appreciate you. Thanks, DJ Wisdom. Appreciate you as well. Alex Kushner says you gotta watch the Skinwalker Ranch on History Channel. I think I've seen it before. With Robert Bigelow. Nick says, I believe this is the beginning of the end of the bull run. I don't think it's the end of the bull run, but I definitely think that this might be a distributive event where we do retest maybe the Elon Musk buys or something like that, you know. We'll have to find out. We got a nice area of support here still at 45,000, so that's the next target, is 45,000 to the downside. Alex says, fuck crypto. Let's all about the aliens. Okay, that's a great point. That's it, guys. Who cares about crypto? Let's talk about anti-gravity and tic-tac shaped UFOs that the Pentagon and the Navy are now saying they don't know whose they are. Pretty sure they're not China's. Pretty sure they're not Russia's. Pretty sure they're not theirs. So who's flying them? That'd be fun to know. Under a $2 trillion market cap now. Yeah, I think, again, let's see, 2090 for Ethereum. Yeah, okay. Let's turn these bars off. Look horrible. 2090 for Ethereum. Okay, yeah, see, Ethereum actually looks a little stronger than Bitcoin. But yeah, Bitcoin does have a lot of supply that came in there. Ethereum had less there than it did on its primary shakeout. Well, we'll have to wait and see. We might see a lot more come in. We'll find out here. Yeah, $54,000 Bitcoin. A test of 48,000. I was really hoping we were going to just jump back above 59,000 with no problem yesterday. Well, maybe hope is the wrong word. I actually suspected that we might. That was the wrong thing for me to do, wasn't it? Jordan Newton says, I appreciate your time. Nice to have people connect with. Always happy to share. Nice. Glad to see you guys all here for the live stream. Is it a good idea to maybe not? Jason Feller asks what I believe to be a fucking awesome question. Jason Feller says, is it a good idea maybe not to look at the market for a week? Jason, it is actually almost always a better idea not to look at your portfolio price, period. And just to think about accumulating assets, generally speaking, and ignore the news too. I like looking at the markets because I'm trying to learn something. It's been a long time coming. I think the pandemic taught me, once you open the book and you see where the first chapters go and you continue to read, it's like, then you know the book. Like, I don't know, go read Siddhartha. This is kind of like that. This is like that moment for the market cycle. The market has a lifespan. We get to witness it, and it's usually an up and then a down. Did you buy any Doge? Yes, I had actually had Doge in the portfolio. I didn't buy it like after the pump. I bought it before, and I said it was. I told you guys why I was doing it. I told you all it's because I don't know what the future is going to do, so I like to bet on a randomness. So I'm gonna buy a little Dogecoin just because I thought it was a smart idea to bet on randomness and to bet on the future doing things that I couldn't expect, because the future has always done shit I could not and would not have expected. And look, I didn't expect that. Congratulations, universe. You did exactly what you've done to me so many times before. You surprised the shit out of me. I appreciate it. Cliff High predicts going down to 45, then to 90. Yeah, that's a 45 here. That would be right at the bottom of the trading range. There's nothing wrong with that. Again, if we do come down to 45, unless we turn around really quickly, it's usually not a good sign. We're probably going lower. If we come to 45 and we go below 45, we're going lower too. So we'll see. It'd be nice to see if we could find support here at around 50,000, 49,000. Just, we're going to want to keep a close eye on it. It's going to decide our next few months. Watch the markets, don't check at the portfolio. I think there's something so wonderful to be learned about this, especially because the pandemic was such a noticeable experience. I think when we're studying the markets, we need to take into account how important the human psychological influence on the rational, or in this case, irrational evaluation of prices of assets. It's probably the most important part of the thesis, I think, primarily speaking, and primordially speaking as well. Shit, son, everybody recognized that moment. You do not need a chart to recognize the motherfucking pandemic. Like, bing, everything was going down. Hey man, what indicators? The indicators are kind of unimportant. Didn't need an indicator to notice the pandemic coming. And that's the most important part. I highly suggest everyone really tunes into that idea and tries to understand what I'm saying when I say that, because it's a very important thing to understand. I mean, look, this is maybe one of the problems with the idea of borrowed wisdom. I'd heard the Rothschild's quote of like, buy when there's blood in the streets. And we think, oh, buy when there's blood in the streets is this metaphor for like, oh, look, there's a red candle and I'm zoomed in on the 4-hour chart. Like, this must be blood in the streets. I should be buying because everybody says buy the dip and this is the dip, right? No, blood in the streets is a literal motherfucking thing that happens when there are people dying in the streets. And this spring that we had, the pandemic, was a moment that no one needed a mark. You don't need to look at charts or the market to realize what's happening. And that was the best time to start your investments. Every day after that, we've gone up. Every day since then, we have only gone up, right? Day over day over day, over day over day, just up. It's amazing. It's pretty fantastic. So knowing that that's where the thesis starts, and we're in the middle of that thesis now, worrying about your portfolio value should be much more an indication of, well, when do you start investing? Because it's a hell of a lot easier to have a shit ton of room for upside if you buy assets that are extraordinarily, irrationally undervalued at that moment, and continue from there. Doge can't be healthy for the markets. I hope it crashes and burns. All the market cap could throw in real coins. This is, again, well, first off, yes, Doge is likely a sign that we are well in our way into the bull market. It may even be a clear signal that the bull market is generally over. I'm not going to disagree with that. Ultimately, I think, though, when we look at like where Ethereum currently is, and we understand the potential value for what these financial instruments can do, Doge has a reason that a lot of people don't understand. Even though I think, or at least let's say I don't think they understand. I feel that what Elon Musk was talking about was a clear indication of the difference between a currency and a money. And they're both valuable. They're both valuable, and to have open source, and where we can choose to use them with an open source monetary protocol or monetary choice that we can see in the code. So although, yes, it did start out as a meme, it's actually using, I believe, the SHA-256 hashing algorithm. It has an inflationary supply. It is extraordinarily fast. So there are some differences. It's not Bitcoin exactly, but it's not necessarily that different from Bitcoin either, much like I think Litecoin is maybe Charlie Lee changed 15 integers or something. I'm not a coder, so don't quote me on any of that shit. But ultimately, yeah, these are different ways to measure financial trust, or let's say contract trust, or contractual or tokenized trust and gratitude, something like this. So there's a lot of value here that I don't think is fully recognized in a conceptual aspect. And Doge, as a meme, as an identifier of what the people are choosing to be interested in, is a hyper valuable point. I think a lot of people disingenuously knock but don't understand, and that's important because we often mock what we don't understand, but it's not a good way to go. Look, you needed $1,000 in Dogecoin, and now it's worth $5,000 today. Like, it wasn't a bad choice. Remember all the people like Wall Street Bets, like, oh, look at, and people were like, oh, don't buy Doge ever. Yeah, well, it worked out for the TikTok kids, didn't it? And that's an important thing to understand, is that I like to vote on randomness. I like to vote on knowing that I don't know what's going to happen. So yeah, I own Doge. Fucking rights. What did Elon just tweet? That would be a fun thing. Here we go, back to Bitcoin. Flash crash incoming. Yeah, we could see a drop here. Glad to be alive and breathing. Yeah, it reminds me of a great Tool song. Oh, hey, BB. Shout out to Tendi and Chan for long-time supporters of the Arcane Bear family. Thank you guys for joining us this evening. Whoa. A lot more comments than I can't even keep up with this. Okay, I'm going to have to... There we go. So the befuddled holder says, Tio, do you think there's any truth to rumors that Google and Walmart have bought Bitcoin, or is this just bull market irrational hopium? No, there's actually a very real reason for them to want to have Bitcoin on their balance sheet. It can act as like a suppressant to the downside. So if Bitcoin goes down in that particular tax cycle, they can write that off as a loss. And actually, seeing about what time of the quarter it is, it's probably important to remember that this is the tax quarterly cycle. Anyways, keep that in mind. Ela is talking about a Tesla crash. Which Tesla crash? What did I miss there? Sorry guys, it took me a minute to get rid of the scammers there. Okay, let's take a look. Okay. Let's see what's going on here. let's go back to our we're going to take a look at Glassnode. So there's two things. Number one, hopefully the internet is somewhat fast for this. Yes, okay. So this is the stock to flow model, and this is again based off the demand. We definitely need demand to continue for this to keep growing. But this is kind of an operating business structure for the price of Bitcoin and the mining process and everything that goes into mining a Bitcoin, and then how they sell the Bitcoins that they mine. That's generally what keeps the price in somewhat of a balance and a fluctuation between all the long-term holders and buyers as well. So I think we're going to clear $100,000 pretty easily. I don't think we're going to get as much ridiculousness out the top, although Bitcoin has always surprised me, so I'm not going to bet against that. We did see a lot bigger stepping stone moves up. Oh, whoa. Super chat's gonna almost scared the crap out of myself here. The stock to flow model, I think, is going to push us probably around 120, 150. I think we could always go much higher. Bitcoin's done that multiple times before. I just look for a clear value assertion from a business perspective, because I'm not that smart. I know sometimes I sound like I'm smart because I like things like asymmetry, but I read things that are smarter than I am because I'm not. True story. Okay, so on the upside potential, right in the middle of this bull market, stock to flow model, everything looks good, but it's generally our exchange balance stack that we kind of want to check on. Okay, yeah, and we've been dropping just pretty much day over day. I've got us way into the future here. Zoom in. Yeah, here, and this is really interesting. I think something we should point out here too, and we've gone over this, is if you notice pretty much from April 16th, the amount of Bitcoin on the open market has decreased every day Bitcoin's price has gone down. We are still in a bull market. And this is what's fascinating here too, is that, and I've said this, I think almost every episode, is that as the supply on the open market decreases, the volatility increases in both directions, right? So right now we're getting a lot of volatility with limited supply coming in. On the 4 hour, it's not as noticeable that the supply is as big, but we're seeing volatility come into the market. But we're also seeing that supply instantly leave the market every time it hits the market as well. So we know that the big players very clearly are buying up the Bitcoin and turning it into the cold storage in huge amounts, right? And they're not fucking around back there. Let's see, Grayscale holdings. I think actually Grayscale has been decreasing their holdings on a kind of a day-over-day basis. Yeah, over day, 650. They've been selling a few hundred Bitcoin a day. Yeah, check that out. Grayscale has been selling a few hundred Bitcoin per day, basically. We can look at the, let's go bar chart. Yeah. Yeah, about 50 to 100 Bitcoin per day. Grayscale has been gradually decreasing their holdings. So we do see the bigger players playing in distribution, but not in big chunks. They're slowly shaving off profit on a day-over-day basis, not trying to disrupt the market too much. And we don't see any dramatic increase in that. Look at this, 650,000 or 650,000, 300, 650,000, 310, 275, 137, 650,000, boom. So they've definitely been decreasing on a day-over-day basis of around 100 Bitcoin in their holdings. And again, it's this exchange balance stacked, I think, that gives us the clearest example, because it is going into offline exchanges. And that's, I think, probably one of the most important parts. Oh, here we go. Exchange balance percent. And by the way, guys, the color behind me is yellow today. If you jump back to the beginning of the video, I went over pretty extensively my thoughts on kind of why we're in the middle of the market, and we could see this more abstract reaccumulation cycle. Yeah, okay, so here's the exchange balance dropping on a day-over-day basis, again, since April 17th, around 12.8% of all Bitcoin were on open exchanges, and then by April 19th, we're at 12.6, so 0.2%, or a 20th of a percent, excuse me, within just a few days, which is a significant amount of Bitcoin, might I add. It's not a small amount. I don't have that much. That's a lot of Bitcoin. So because of that, because of these big changes in the supply signature, the volatility does increase both to the up and to the downside. The comp operators are decreasing their holdings, not at any large scale. Again, the distribution here on a day-over-day basis from Grayscale right now is pretty thin. Like if you look at it on a larger frame, it doesn't look how much they've accumulated. Like in January 11th, they had 600,000, and then by February 15th, they had 650,000. And they've been shaving off a few hundred. If all of a sudden they start to dump more, and decrease this more, 600, 650. Yeah, they've been dripping around 50 Bitcoin out per day onto the open and retail markets. And remember, they're one of the biggest holders too, right? So they haven't dramatically increased this drip from what I can see. Now, if all of a sudden it starts to increase dramatically for some reason, well, that'd be a cause for a bit more concern about these larger distributions. But again, even if we get, I think, something like this more intermediary potential distribution, I don't think it's the end of the market. Even if we go like this, we go down to say 28 grand, and we form a reaccumulation pattern back near 30, like $30,000 to $40,000 or something. There's nothing wrong with that. But again, we are seeing actually an accumulation bump right here, these two diamonds. But I don't normally share these with you guys, but. And again, I would recognize that here with that supply indicator not being as thick as the primary shakeout, but we'll see. It varies. If I get up close, I can definitely tell that it's not that far off either. So something to watch more closely for. Is it over for Bitcoin? No. What's with everyone tripping out about this pundy nonsense? It just makes me want to ban everyone who's interested in that. It sounds like a scam. If that many people are interested in it, I don't like it. I almost don't even like the fact that this many people like Bitcoin now. It's like it's too popular now. I'm like, nah, it's not as cool as it was. I mean, yes, it's hyper cool, financially speaking, but things are. Now everyone wants to know about it. So I don't trust the Pundy X idea. No. That's what I think about it. Okay, anyways, I'm going to leave it at that, guys. Thank you for joining us this evening. Everything looks great. Been enjoying this bull market so far. Yeah, feel pretty good about it. I mean, just in general from like the alt sector and stuff. I'll go over it tomorrow, but yeah, we're definitely seeing kind of a potential change in here. So we'll watch, we'll learn. I'm not too particularly concerned about it. Everything looks great. Follow us on the channels below. Yeah, we'll definitely do an earlier stream tomorrow. I just wanted to have an evening stream tonight for fun. Anyways, I think my dog wants in the house. Well, we'll see you guys in the next episode. Thank you for joining us. Boom.